Hi to IPO subscribers. Welcome to eaglelive.ai. Today let us review SME IPO from SUMAX Engineering Limited. Here we go on IPO review. This is the financial analysis and financial status of the company as generated by AI powered software. And as per information given to the software, this company has been categorized as a healthy company. Let us see what are the financial strengths that made the company financially strong. That is, solvency, debt equity ratio is good and everything is good. Only DSR is 1.48. Okay, it's almost close to 1.5. It's not an issue. Coming to current liquidity also, liquidity ensures the survival of the company. So this is also very good, 3.35 current ratio as against 1.33 and quick ratio is 1.5, sir, very good. And inventory turnover 5.3, sir, doesn't matter. It should be in between 8 and 10. Rest of the metrics are very good, all are positive. And here we have not identified any financial irregularities or funds diversions. The software has not identified. And coming to profitability, EBITDA is 19.15, EBIT is 17.81, PBT is 17.24, PAT is 12.76, cash profit 14.1, EPS is 8.66, which EBITDA margin 12.9, net profit margin 8.64, generally we expect more than 10%. ROC is 23.86 and ROE is 23.1, very good. So book value per share is 41.82, very good, good bad. And the cash flow from operating activities 18.82 plus, and of course investing activity minus 27.43. From financing activities 4.8. Net is 3.79. And 3.79 is maybe because of a heavy amount of investments. It's not an issue. Market value, market IPO price is 101. And based on that 101 market price, we are getting price earning ratio of 11.66, very good, within the benchmark level. Wow, price to book value is 2.41, very good. So in general, should be less. That means the company is leaving a very good amount of future earnings to the investors. Good. Company is a good company, and investors also can have good future earnings. Good, good. And coming to growth indicators, except the sales growth, why it is only 0.78, and restaurant positive. Okay. So this is the financial analysis and status of the company. The company is a healthy company, so one can take it positively and go ahead. So now we go on. IPO review. Here is the IPO review. SUMAX Engineering Limited. SUMAX Engineering IPO, attractive valuation but can capacity expansion deliver. SUMAX Engineering operates in the automotive OEM and auto for refinish ecosystem, offering manufacturing as well as trading products. The IPO is particularly interesting because the company is raising fresh capital for manufacturing expansion and working capital. Good proposition. And while the valuation appears relatively reasonable, good. And business overview, what does SUMAX Engineering do? So serves the automotive OEM and auto refinish markets, manufactures adhesive tapes and guts, polishing compounds, buffing pads, and reflective tapes, printing solutions, car care products, trades, and that means trading, electrical and pneumatic tools and abrasives and body shop consumables and aerosol products. Entering paint protection film, that is a potential new growth opportunities. Okay, good. And benefits from automotive production and aftermarket demand. Very good. Key growth drivers, rising vehicle ownership, increasing disposable income, growing automotive aftermarket, EV-related product requirements, premium car detailing, and paint production, and make in India and PLI-related manufacturing opportunities. Very good. IPO, where is the money going? 53.4 crores fresh issue and no OFS, and the IPO proceeds are primarily intended for 4.89 manufacturing unit 1, okay, which going for expansion, but 16.62 manufacturing unit, okay, going, maybe putting some additional equipment and machinery, and 12 crore is the working capital per proposition. So balance general corporate expenditure. Investor question, can the new manufacturing capacity generate sufficient returns? This is one of the most important factors to monitor after listing. Of course, so you can expect, no, when they're going for some additional machinery, you can always some increase in installed capacity of the company. So company will have good results also. Valuation, the big positive. Yes, it is a big positive. Valuation looks attractive. EPS 8.66, IPO PE 11.66, PB 2.41. Very good. So metric projected EIP is 8.99, projected 1.9. So very good. And a key valuation message at around 11.66 PA, the IPO does not appear aggressively priced. Yes, no, not at all, not at all. If the company achieves the stated 11.31% earnings CAGR, the implied P of around 8.9 could make the valuation even more attractive, of course. But cheap valuation alone is not enough, of course. We do agree. See, first of all, company must be doing well, no? So investors must verify whether earnings growth is sustainable, new capacity gets utilized, cash flows improve, IPO funds are deployed efficiently. So key risk, capacity utilization risks, of course, we're going for new machinery. So they must be in a position to utilize the capacity at 100% installed capacity, if not 100%, at least 70-80% capacity. So related party group is common in all the cases. So a group company operates in a similar business. Of course, everyone has got his own market. And question, could the related entity create a conflicts of interest or compete for the same market? Maybe it is not an issue. Competition, the company competes with, competition. The company competes with both domestic and multinational players. Execution risk, expansion projects depend on management estimates and successful execution. Cash flow, profitability should be supported by operating cash flows, of course. So only thing is they have gone for some high amount of investments, otherwise cash flows is okay. And promoters and governance, positive, the pre-IPO promoter holding is down to 96.74, post-IPO promoter holding 71.25. Significant promoter ownership indicates strong economic interest, of course. Concern, the presence of group companies in a similar business requires continued monitoring of a related party transaction and risk allocation, what investors can do. So it is the company that they will take care of, doesn't matter. Governance issue, moderate risk. And the market sentiment, the broader Indian IPO market is currently active, with August 2026 seeing a particularly strong IPO activity. Recent reporting indicates investors are becoming more selective with valuation, governance, earning visibility, and cash flows receiving greater attention. Recent IPOs have also shown strong investor participation, although outcomes have varied significantly between companies. For example, Youth Transmission and Technocraft Ventures saw strong subscription and listing performance, while the broader market remains selective. So market sentiment positive but selective. Important. Strong overall IPO sentiment should not be mistaken for guaranteed listing gain. As SUMAX engineering, valuation business fundamentals should remain the primary focus, of course. So investors scorecard, business positive, industry opportunity positive, financial health healthy, valuation attractive, growth potential positive, promoter holding strong, governance just watch it, capacity expansion, execution risk, and cash flow monitored, market sentiment positive, selective. Finally, Mr. B, subscribe with the caution. It's usual, no? Then we tell subscribe with the caution. Why? The combination of healthy business, reasonable PG, low projected PG, and fresh cap for expansion. Makes the IPO fundamentally interesting and fundamentally strong also. However, investors should not ignore capacity utilization, cash flow generation, related party group, company risk. So I think that this company being a healthy company where you can expect a good corporate governance, they can take care of everything. It is not an issue. And all the best to investors. And a closing statement. SUMAX Engineering IPO looks attractive on valuation with an IPO PE of just 11.66 and projected PE of around 8.9. But the real test begins after the IPO. Can the company efficiently utilize its new capacity and convert the growth into cash? Of course, we can expect also. And for valuation, conscious investors, this looks interesting, but execution and governance need to be monitored, okay, which is common. And as always, investment decision should be based on your own financial goals and risk tolerances. Thank you for watching. Thank you very much. If you found this analysis useful, please like the video, subscribe to the channel, and stay connected for more detailed IPO and stock market research. Thank you. Thank you very much.